Hey everybody, this is Jim at SP500chart.com. It's a little bit before 6 o'clock on November 2nd, 2014. And we're going to take a look at what happened last week in the S&P and why the S&P. Well, the reason is I think the S&P is the broadest and most accurate indicator of overall market health. You've got tech stocks, you've got financial stocks, you've got pharmaceuticals, you've got transportation, you've got everything in the S&P 500, as opposed to small cap in the Russell or just the 30 Dow Industrials or the 20 Dow Transportation. 500 stocks in the S&P 500. I just think it's the broadest picture. So for that reason, that's why I go with that. So anyway, before we take a look at the chart, let me remind you that the website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research, and please make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, we're starting out on a daily chart. Why? Well, because I want you to see what has happened since we called that bottom at in the low 1820s. And you'll remember that when we were headed down to that level, on the day that happened, I mentioned that it appeared to me that there was a high likelihood that that would be a bottom, because that move, this long candle right here, irrespective of the recovery that it made, while it was down at 1820, I just mentioned that that extreme move on that particular day took out every single descending short and intermediate term, mostly short term, every descending support line. So that was basically the antithesis of a blow-off top. Instead, that was climax selling. It just looked that way. Even though we got underneath what appeared to be some important lines, the fact is that that climactic kind of selling seemed to be, to my eyes, to be purging people out of the market in anticipation and in preparation of a new leg up. So why are we looking at the daily chart? Well, because we had an all-time high close in the S&P 500 of 2018. And guys, that's just, wow, that's pretty strong stuff. Now, let's take a look at things in a little bit different perspective. We had been talking about the possibility of seeing an inverted head and shoulders form, and I think I said it looked like this was a double dip over here on the left shoulder. This certainly looked like a head, but it's still not super clear where the neckline is in this pattern. However, regardless of where you choose to draw it at this point, it looks to me to be pretty clear we are above it. In other words, if you said this is the neckline, and this was my first choice, we just didn't get much of a right shoulder. But where have we seen that before? Well, we've seen it 2 or 3 times that I can easily recall over the past 2 years. And where you get a pattern, and then you don't even have much of a pause at all over here on this right shoulder before the market just busts on up. So if this is the neckline and the proper neckline, then we would be looking now for a target of around 2120, which is roughly another 100 points, or about 4.7% higher than we are right now. Now, if you say, well, what if the neckline is here? Well, here's the problem I have with that. Even though you've got this little dip, that ain't much. That's not as much of a shoulder as this is. At least we spent 3 days trying to get above that line. But if this is the line, then we have a target that's more around 2150. But to be conservative, I'm going to put this here. And I'm going to say this is our neckline. And we have a target of about 2120. Now what's going to make this quite interesting is what happens when we come back to some of these long-term resistance lines. This red line has been holding the market in check for a year and a half. Okay, this blue line has been holding the markets in check for 5 years. Well, yeah, 4.5 years since that line got its first defining touch. So that will be really interesting. And here's the deal. I'm not saying this is going to be a top here, but I am saying this. If we get that 2120, and if we get it in such a way that it just looks like all heck is breaking loose for the bears, we could see possibly, I'm just saying to keep this stored in your mind and keep it in your thought process, to be open-minded, that there's a possibility that we could see a blow-off short-term or intermediate-term top. It's possible. It depends upon what path we take in getting up to that 2120 target. So guys, strong stuff. If we look at things on a 10-minute chart, you can see that that we had identified some nice little patterns here, that even though we broke down underneath this rising support line right here, we did so with now what appears to be clearly not the intention to reverse, but the intention to form a continuation pattern from which we would come back and get into the 2000s again. And go back and listen to the videos. That's always been kind of the bullish scenario, and now we've seen this come to fruition. Now I'm going to extend this line on out here. It's moving up at quite a clip. We don't ever have to touch this line again, and the markets could go up wildly without back testing this line, okay? But I'm going to add something else today, because we see that this was a little bit of a low here, and that we got a very nice move up off of that. I'm going to put one additional line on this chart. We're going to go back to our beginning here at that 1820 low, and we're doing this, okay? What color you want to make it? What color is not on this chart in a while? I don't see anything orange, so we'll make that orange. Just in case this small channel right here ends up being part of a larger channel. And if it were to do that, then chances are pretty good that we would see this little top right here being possibly the first defining point on a larger channel. Do you see what I'm saying there? In other words, we've seen this before, where we've had a fairly narrow channel break, we go sideways, and then we move up again, and we find out that this little channel between these two yellow lines wasn't the end-all. It wasn't the be-all. It wasn't the main thing. This was simply a small channel that came up and took us from the first touch on a broader channel to the first touch on the to the broader channel resistance line. So in other words, we could be seeing 1, 2, 3, 4, something up here. So I don't want to put too much into that right now. So because I'm going to be kind of light on that idea until we see more information, let's just make those kind of fairly dull. And I tell you what, since we're kind of talking about rising channels, let's just make those yellow ones orange, so they stand out a little bit better, and also they will relate a little bit more, perhaps, to these two orange lines right here. So if we look at the week, all we can say is we started this week in with a break of this line, of this channel right here, but not with a break that was so significant that it made me think, or that the chart said to us, expect a reversal here. This was a break of this line right here that was just very mild, and frankly, based upon that, I think you had, and also the fact that this had a flat top. You remember we talked about that that little flat top on this consolidation area, that has a tendency to create a bullish bias towards the eventual move out of that pattern. Well, obviously now we got it. Also in the week, we had a little descending wedge that, even though we broke down underneath the support line, once we broke out over the top of it, we came back down to the apex perfectly, and then we started back up. The trading on Friday, we had this nice gap. The gap is probably bigger than what this gap actually shows, because I'll remind you that the S&P is calculated from the underlying stocks that are in it. And often, if you have all of those stocks gap up, they report individually at different points as the first trades come in. Most of those trades happen very quickly, but you're not going to see a gap all the way up here, because this first green candle could have been the first trades. So in other words, the gap could actually be higher than what we show here. Finally, is this some kind of little pattern that I saw throughout the day here? Not particularly. You know, maybe we need more information. Frankly, it doesn't look particularly bullish, and it doesn't look particularly bearish. It just looks like we went sideways. The good news is we did close at or very near the high of the day. And guys, it was just a really strong day. And again, I hope you heeded the advice that has been one of the underlying themes for the past 3 years, really, since I've been doing this YouTube videos and also the website. Don't underestimate the ability of this market to rally. Not yet. Don't try to pick a top. Please, I would really advise, if you see any signs of a top, maybe lighten up a bit. But if you try to pick a top and short it, and I mean lighten up on long positions. If you try to pick a top and short it, it hasn't worked for 5.5 years, and we do not yet have a topping pattern. So there's nothing in the chart that says, yes, this looks like a top. There are things in the chart that have said, well, maybe it could be a top, but nothing confirmed. So guys, I just want to thank you for watching the video, for bearing with me this past week as I did some traveling. My business has really picked up. I'm going to be traveling again in a couple of weeks, but I'll do the videos. They will just be done on the road, and they tend to be a little shorter that way because of the flakiness of hotel wireless connections. But anyway, nice week for the bulls. Let's see what this week brings us. Thank you for tuning in. to my YouTube channel. If you are not a subscriber to SP500chart.com, think about it. It doesn't cost much, really. If you're a smoker and you're paying $6 for a pack of cigarettes, all I'm asking is for you to give up about what? 4 smokes a day? Okay? If you're a smoker, give up those 4 smokes. Subscribe to SP500chart.com. If you are a coffee drinker, buy a cheaper coffee. Skip the fancy caramel macchiato. Just get a tall coffee. And you can do that for 10 days and easily subscribe to SP500chart.com, where you get this kind of video analysis after every day's close. So thanks for watching. Take care.